This is the Glatt Properties Podcast. We're doing horror stories for the month of October. I'm your host, Bruce Gladhorn. Let's get into it. This one is going to be a little bit of a shorter one because there's a lot of weight and I can't really get into too much of the explanation because this one isn't really too much about me. This one is about a client that made a $28,000 mistake. Okay, so I had a client come to me saying that they were in the process of selling their house. They had a contract, they had a closing date, and they wanted to buy another investment property. This was an investment property. I said, okay, great. Sounds like a plan. I told them, you got to 1031 the money or else you are going to get hit with a very large capital gains tax due to the amount of time that you've held the property, and you're not going to be able to avoid the IRS because they're going to win. They said, no, they're not going to do that. They're not going to 1031. That's too much work. They're just going to pay the taxes. I said, okay, fine. So we helped them get a rental property. Boom, boom, boom. Got them in there. Everything's happening, rocking and rolling. Went from a client in my realtor's business to a client in my property management business, which is fine. But, fast forward a couple months from that closing. Well, fast forward a couple months from the closing of the previous house and the purchase of the next one, they got hit with a $28,000 capital gains tax. And of course, I get a phone call that says, "Oh, hey, what's going on here? My family can't afford this. What do we bought the rental property to provide income for my family. I'm sitting here, my wife's like, what the hell's going on with this? Why do I have to, pay $28,000? What is this?" I reminded them about the capital gains, reminded them about the 1031. They didn't want to do it. Hey, it's part of the game. You got to live and learn. Tough shit. Move on. But if you want to be smart about it, here we go. Of course, my phone's going off every time I do this, which is great. I guess I should just do this all day and all the business will come in. But if you're going to attempt to sell an investment property, you got to 1031 it. A lot of people will sit there and say, oh, you just 1031 the property, you move on, and you defer the capital gains. Okay, nobody actually tells you how to do it. So don't worry. OB here, Uncle Bruce here, is going to tell you how to do it. So this is what you do. You need a qualified intermediary to hold the account or hold the funds in their account. Usually like it's an escrow account because it never actually is really being used. It's just transferring from one place to another. If anybody's going to talk with you about rental properties, investing in real estate, whatever, and they're going to say about 1031ing, ask them one question. Who holds the money between the sale and the purchase? Qualified intermediary, which is an attorney, a company. You can just Google. There's companies out there that handle it. There's a company for everything, but there's companies out there that handle it. That's how easy it is. If they can't give you that answer, they actually never have any experience or they're never actually doing it. They're not actually real estate investors. They're just landlord. They just bought a rental and they're like, oh, okay, I'm a landlord. All right, so what you got to do is you got to make sure that you know who the hell you're talking to and what the hell they know about. Because anybody that ever tells you that they know everything about real estate is an absolute liar. Wave to them, smile, bless your heart, have a nice day, and immediately give them a wide berth because they're going to use you to learn. They don't actually know what they're talking about, okay? So all this company does, or this entity does, is gets the money from closing, it goes into their escrow account, and then they transfer it to the next one. There's always fees, there's always what it costs or whatever, but at the end of the day, you're deferring taxes. So if you made $15,000 on the value, and obviously you have to sell it after you've held the property for a year, yada, 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 and you have to buy it. The next house has to be worth more than you sold the house for, the previous house. So if you're going from 123 Main Street to 125 Main Street and you're selling 123 Main Street for $100, you got to buy 125 for $101. And everybody wins. Everybody's happy. You keep getting rent. You don't pay taxes. You keep paying taxes to the government. They win. But if you made $50,000, I don't actually know what the tax rate is. So if my computer would participate in today, I'm going to get you guys an answer, actually. So how much pay on a real estate sale. Look at that. I Googled it. Oh, everything's Googleable. Google it. Don't question, just Google it. Whoa, okay. So here's the answer that the internet machine is giving to us, according to something on bankrate.com from August 25th, 2022. So that was 3 months ago. If you sell a house or property in less than 1 year of owning it, the short-term capital gains is taxed as ordinary income, which could be as high as 37%. Okay, so that's never do that, but that's good to know. Long-term capital gains for properties you owned over 1 year are usually taxed at 15% or 20%, depending on your income tax bracket. Damn! So if you made $50,000, you're either paying $7,500 or $100 or $10,000 on the property. Wow! Because they only tax the earnings, but then you have to take into account depreciation and all that good stuff. But still, if you made $50,000 off the sale of your property, and you got to give the government $10,000 for doing nothing, that's a load of BS if I've ever heard one. Wow. Okay, so we look at that. We all learned something. There's your answer. That's why we don't do that, because they're going to take $10,000 away from your equity, and you're going to have to pay a bunch of people who don't know what the hell they're doing with the money anyway. So, I mean, I'm not going to speak for anyone, but I'll definitely speak for myself. I am more than qualified to lose my own money on my own. I don't need to give it to the government for them to screw it up and lose it. So take that for what it is. I hope you all learned something today. This is a $28,000 horror story, and if you can use this to save a nickel, I'll be happy. That's all I want to do. So otherwise, have a great day. I'm going to put a couple out today. Podcast, maybe they'll get uploaded. I don't know. We got a couple of horror stories, but either way, hope October's going great. The leaves are changing. Fall is here, and Pete the Pumpkin is doing all right guarding the front door. So if you're looking for an opportunity to invest in real estate, now's the time. There's a lot of buying opportunities. If you need some help, if you need some advice, if you don't know what to do, you're not in my market, you're not in a state that I do business in, you just want some help or whatever, shout us out on Instagram, Glatt Properties. Send us an email, glattproperties@gmail.com. Or you could hit me up at my real estate agent stuff. But either way, stay safe, y'all. Have a good day.